Better System Trader, episode 37.
Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Welcome to the Better System Trader podcast. This is episode 37 and I'm your host, Andrew Swanscott. In this episode, we're doing something a little different. We'll be discussing the results of a quantitative study completed by a previous guest of the show. But why is that different? I'll explain that in a minute, right after I introduce the guest. The guest for this episode is Cesar Alvarez, who was a guest of the show all the way back in episode 3. Cesar was Director of Research for Quant's Research for almost 9 years, developing quantitative trading models for individuals, prop traders, and hedge funds. He's a full-time trader and consultant, publishing his research on his website, alvarezquanttrading.com. In this episode, he's going to share some research he's completed on a key element of trading systems. He'll also be testing out some common pieces of trading advice to see if they're actually true or not. I'm sure traders of all levels will find this research valuable. But before we get started, I'd like to let you know that we will be discussing backtesting results and some charts. We'll be explaining them as we go for those just listening along, but if you'd actually like to see the charts while we discuss them, you can download a PDF copy from the show notes page at bettersystemtrader.com/37, or if you prefer to watch this episode as a video, you can also do that from the show notes page too, or from the Better System Trader YouTube channel at bettersystemtrader.com/videos. Also, the results we'll be discussing today are for educational purposes only and do not constitute financial advice. For more information, please visit the disclaimer and terms page on the website bettersystemtrader.com. Anyway, that's the boring stuff out of the way, so let's get started with Cesar's discussion on stops, the good, the bad, and the ugly. Hope you enjoy it. Thanks for joining us today, Cesar. You've been a guest on the show before and many people already know your background. So how about we start today with a little bit on your trading? Can you give us some information or some background on your trading?
Yes. I've been trading probably for 20, 25 years now, mostly stocks and ETFs. I tend to be a short-term trader, 3 to 8 day holds. I do longer trading strategies than the monthly holds. I do dabble in options every now and then, usually to a detriment of my account. I believe there's strong edges there, but I still haven't found them there. But as always, I'm researching, looking for something better than I'm already trading. And this is kind of where today's research came from. I was looking for something new and different.
All right, thanks for that trading background. So you've joined me on the podcast today to share some interesting research you've been doing. It's a quantitative look at a key component of most trading systems. Can you tell us a little bit about what this research is and why you started the study?
Yeah, so, we always hear you have to use stops, especially on, if you've got a longer term strategy that holds in the months. You're always heard, you got to use stops, whether it be trailing stops, max loss stops, profit targets, that part really doesn't matter, but it's the fact that you need to be having those kind of stops or entries and exits. But one thing I had never honestly done is done a really overview of the different types of stops, taking a really good quantitative look at how do they affect a strategy. Which stops work better, which ones don't. So I wanted to create just a very simple strategy and just to get a better feel for stops. I don't trade in the longer term. And I don't usually use stops, especially my shorter term trading. So I just figured this was a good way for me to get a much better feel for stops and to be able to share with others what I learned.
Yeah, okay. So I've actually seen you post some research on your blog on mean reversion and how stops hurt performance of that particular strategy style. So are you going to show us that we should or shouldn't use stops?
Well, yes and no. Often people tend to make things black and white in trading, which they'll say you have to use stops or you must not do something. And I honestly believe trading is much grayer than that. It all really depends on your strategy, what your risks are, what your goals are. So yeah, at the end, you'll see some numbers that may say, yes, I should be using stops. But you may be surprised on which stops you're using. And, it may be different from what you are currently using.
Mm.
That doesn't mean that you should stop doing what you're doing. It just maybe reevaluate what you're doing. So a question for you, Andrew, is, how do you use stops? Do you use stops in your trading? What type of stops are you using?
Yeah, I do. I actually, I trade a couple of different styles. I use volatility stops, and I also use time stops.
Are your volatility stops, are they like a max loss stop? Are they a trailing stop or profit stops?
They're a max loss stop.
No, okay.
Mm.
Actually, that'd be interesting to see because it's one of the things we do cover today.
Oh, interesting. Well, as you mentioned, there are lots of different types of stops. Some are more advanced than others. So how do you see the progression of these types of stops being implemented?
Yes. So the way I see it is, I've been doing martial arts for a long time, and this, I'm going to bring in this analogy that I've gone through a lot is learning. Martial arts you start off as a white belt, where you know very little, and then you slowly progress depending on your martial arts that you're doing. They're different colors, but in the martial arts that I do, starts off as white, works up to your gray and yellow and orange and so forth. And I think this is the way we're going to progress today, where as a white belt, you don't know anything. So we're going to start off with a baseline strategy, which has no stops at all, and then work from there.
Okay, great. So why don't you explain a little bit about this baseline strategy?
Sure. As our white belt, first let me just give you some global things on our strategy. All the test results are from 2005 to June 30th of 2015. There's no commission or slippage in any of our results. And I'm using premium data as the data source. It is survivorship and pre-inclusion bias free. The strategy itself is what I would call a very simple breakout strategy. I wasn't trying to make anything complex. I wanted to start with something simple and add what I consider the basic stops to see how they did them. So a couple of the basic rules is first, the stock must be a member of the Russell 1000 as it existed during that trade date. The close is greater than $10. Our 21-day moving average of the dollar volume is greater than 10 million. These are just some basic rules for liquidity and understanding. Now to our actual strategy. So I'm trying to trade a very basic breakout kind of strategy. I'm looking for today's close to be the highest one of the last year, so the last 250 days. Another rule I added was I want the ADX, the 10-period ADX, to be greater than 35. That rule in there is really there for, I'm looking for movement, recent movement. Another one I have is the historical volatility is greater than 35. I've used a lot of my previous tests with Connor's research. Historical volatility has always been very good at helping point towards stocks. Sometimes you want low values, sometimes you want high values. In this case, I look for higher values because I'm looking for a bigger bang for my buck. And then the last part is I want today's dollar volume to be 25% or more greater than the 21-day average of the dollar volume. So I'm looking for a new high with increasing volume, what a lot of people would traditionally say to be a breakout kind of strategy. All those rules make sense to you?
Yep, sure.
All right. So very simple. We get a stock that sets up, we enter at the next open, and then we exit 134 days later. Now you're going to be asking me, why 134 days later?
Yep.
What I'm looking for is an average hold of 6 months. And, you'll understand as we go through the other tests and why we're looking for an average hold of 6 months. I'll explain that a little bit later. So those are the basic rules of the strategy.
Okay, so now that we have the strategy, how are we actually going to compare these results? Because there are a lot of metrics and everyone has their favorite. So what are we going to be using today?
Yes. So first of all, we're not going to be trading the strategy as in a portfolio. The problem of trying to trade a strategy in a portfolio is you have to then deal with position sizing and the ranking, and those things tend to skew the actual trades. All we care about is the trades. Are the trades good? Are they getting better with results? Not necessarily is it improving the portfolio. It just adds too much complication. So as to the metrics that we'll be using, I'm going to be using Dr. Van Tharp's R to kind of say, okay, each trade we're going to risk a certain amount. Maybe it's a 5% risk or a 1 ATR risk. So we'll do that, and then we'll find out what the trade does, and from that we can calculate our multiples. And and then we'll just what we're going to be looking for is does adding stops increase our multiples? And the way I'm going to compare these strategies is I'm going to take the number of trades that we get and just multiply it by the average R multiple, and that's going to give us our total R multiple. And this will kind of give us a general idea, are we increasing our profit potential? If your total R multiple is going up, your stop or whatever we're doing is increasing our results. That make all sense to you?
Yes, it does, sure.
All right. So now we've got that, let's look at our baseline strategy. So I ran the baseline strategy, ran it during our little test period, and I got 975 trades during that test period. I got an average hold of approximately 6 months. One of the nice things, really surprising to me, with no stops. So I'm just exiting basically 6 months later. Andrew, what would you guess when somebody says you're just exiting 6 months later, what kind of winning percentage you would get?
I'd probably expect around 35%.
Yeah, I was expecting the exact same thing. And this comes out with a 58% winning, which I was utterly surprised that number was so high. Now, you may have a very high winning percentage, but your average R multiple was only 0.168, so very small. And this also gave us a total R multiple, so multiplying 975 times 0.168 of 164. So these are the values that we're going to be looking at. When we add a stop, we're going to see, what happens to our percent winners? What happens to our R multiple? Is that increasing? And what happens to our total RM? So of course we want, most importantly, our total RM is really the biggest key thing that we're going to be focusing on.
Okay, great. So some numbers to remember there. We've got 164 as the total RM,
yes,
and the average RM of 0.168.
Yes, those are numbers that we'll focus on and we'll come back to as we go through the rest of this discussion here.
Okay, sure. So the work belt trader gave us a benchmark of total R of 164 and an average R of 0.168. So what's the next colored belt from there?
Yeah, so the next belt is gray belt. Now we've got a baseline. Now it's like, okay, what's the very simplest things? Now you start to learn very basics. And what's the most basic stop loss? It's just a simple percentage stop loss. So the next one we're gonna take is we're just gonna add to our strategy. If we lose X percent, so let's say we test 5%. So if intraday we got a 5% or more loss, we're just gonna exit intraday at that price. And then we'll exit 18 months later. This is very simple. It cuts our losses. It's very, very basic. So here's this chart of the results. What do you see in these results from doing a very simple percentage max loss?
Okay, so you've tested a range of percentage values from 5 right up to 30 in 2.5% steps. Now, what I can see is that the smaller stops produce a lower win percentage, increasing obviously when the stop value is larger. But we've also got, for the lower percentage stops, we've got total RM is the highest, up around just over 600. And the total RM is reduced when you use larger stops.
Yeah, so this was very interesting to see for me that, those small stops, the 5, the 7.5, the 10%, gave you a total RM in the 600s. So we just took our total RM that we had before of 164 and now increased it almost 4 times to in the low 600s. I thought that was, a very good first step.
Yeah.
This is just, the one big negative, though, is, at a 10% max loss, we have a total RM of 609 and an R multiple of 0.615. So, again, that increased dramatically. The problem is our win rate now is down to 29%. So even though we increased dramatically our total potential of profit, our win percentage dropped quite a bit. So, it's something something I was surprised about. I was surprised to start with such a high win rate. Not surprised at the 29%, but, it's something to be aware of. And I think that was automatically to me, one very important observation.
Right. So if we're looking at it at a 10% max loss, essentially the win percentage drops to around half of what it was without a stop, but you've got an R multiple which is roughly maybe about 3.5 times larger. Is that right?
Yes, that's correct.
Yeah.
So that it looks like just the simple concept of doing a 10% max loss is a good thing to do.
So that's interesting, but some stocks, they move a lot more than others, right? So for example, one stock could move 5% in a day while another might take weeks to move 5%. So rather than using a percentage stop, have you done any tests for volatility?
Yes, now we're off to the yellow belt trader. Now, we're getting more knowledge at this point, and you've come to what everybody automatically says. It's like, wait a second, my biotech stock that I'm trading jumps around 10% a day, while my, Dow stock is only moving, 1% a day if I'm lucky.
Yeah.
So yes, so the very common thing for people to do is average true range. This is, one of the most common things that you'll read. And so we're going to do a max loss average true range instead of a percentage. And we're going to do some factor. I tested a 10-period average true range. And so it may be, for example, I'll take 3 times the average true range. And if intraday I've lost, my losses hit that average true range part, I will exit. If I'm still in the position 18 months later, I get out. Again, this is very simple, a little bit more elegant because, like you said, it takes the stock's volatility into account, which is important. Which I think is important. It makes makes sense to me. But one thing I've always discovered through my years of testing, sometimes what makes sense does not always work. So that's why I test things.
Mm-hmm. Okay. Sorry, just something I wanted to ask. So in this test and the previous test, you've got a time stop of 18 months, but in the initial test, you had a time stop of 6 months. So why is there a variation there?
Yes. The reason for that is I wanted to have each of these stop methods to have approximately the same amount of hold period, because if one test has, let's say, a 6-month average hold, while another test has an average hold of 12 months, then of course you expect the larger hold one to have a larger gain. So I wanted to take out the time part component and make it an easier apples to apples comparison.
Yep.
Now the reason that these tests have 18-month holds is if I did a 6-month hold, then their average holds would never approach the same as our baseline because our stops are gonna get us out sooner. So that's why I did an 18th month. 18 months, I will admit, was a little bit random. I could have easily chosen 12 months, 24 months, 36 months. I did want to have, though, a month stop because, especially with like a max loss, if you're only testing max loss ATR, the stock could go up, 10, 20% and then flatline and be there for the entire 10-year test period, and that wouldn't be a fair comparison. So that's why the 18 months is there. It's just somewhat artificial to help me get everything easier to compare, but I thought it was very important to do.
Yeah, sure. Okay. Did you want to continue on with the max loss ATR results?
Yeah, so we'll continue on. So now here's the chart of the max loss results. What do you see, Andrew?
Okay, so you've tested a range of ATR multiples from 1 up to 8. Now, what I can see in the total RM and the multiple lines is that we have a kind of a wide rounded peak between 2 and 4 ATR multiples. Also, anything less than 2, and it kind of drops off really quickly. It's quite a steep slope. And higher than 4 kind of gradually declines over time. So there's a definite rounded peak between 2 and 4 there.
Yeah, and I found this very interesting on this. So again, we have the total R multiple for these, picking a 3 ATR max loss, comes in at 607, which is, again, about what the using a percentage stop was. So you'll see that this 3 ATR max loss is very similar to a 10% max loss. So it's giving us very similar numbers. Our win rate is 28%, so basically the same. And our multiple is 0.614, again, approximately the same. So even though I was expecting these numbers to be better than a straight percentage and was a little bit surprised that they weren't. So, I don't know about you. What's your thoughts on the fact that these are producing basically the exact same numbers as a straight percentage?
Yeah, I agree with you. I would have expected that the volatility stop would provide better performance because, it's obviously based on the volatility of the stock, but the results here show that they're pretty comparable.
Right.
Which is quite interesting.
Yeah, so I found that quite interesting. So another thing I found very interesting that you mentioned is the peak of the return of the R multiples was between 2 and 4. I don't know about you, but when I saw that peak, it rang a bell, very familiar, being very familiar. At least for me, when I'm reading books, I'm reading blog posts, just doing things. Often I hear people say, use a 2 ATR stop or use a 3 ATR stop. Those are like common, especially 3 ATR seems to be the most common one that I read. So this is one of those rare times where what I read out there came out to work out exactly what it was. It's like in this particular case, a 3 ATR max loss was this kind of the sweet spot, which I found very interesting to see. So here's a question for you. So the percent ATR or the percent max loss of 10% and a 3 ATR max loss gave approximately the same results. Which one would you use?
I'd probably use volatility just because in my mind that's probably makes a bit more sense than just a flat percentage.
Yeah, I agree with you. I probably would do the same thing. It was interesting because I always, in my trading, try to pick whatever, if I get similar results, pick the simpler one. And in theory, the simpler one's the 10% max loss. But I think I agree with you. I would go with the volatility one just because it makes sense and I think would make me feel better. And sometimes taking something that makes you feel better and makes you more likely to follow a strategy is the better choice to do.
Yeah, that's a good point. Okay, so we've covered two types of stops, a fixed percentage and a volatility max stop loss. What do you think is the next level of stop progression from there?
Right, so next level, now we're in orange belt. As orange belt, we're picking up more things, we're getting fancy. And I know what a lot of you are already thinking is like, wait, what happens after the max loss? I don't need, what happens if my profits go up? I want to protect my profits. And the one thing everybody, this is the most popular one, the trailing ATR stop. You read about this all the time. I've tested it multiple times. I've added it to my strategies, things like that. So that's what we're going to do now. We're going to trail a 10-period ATR stop or some multiple of it. So by that, I mean, as the price goes up, we're going to keep trailing our stop, maybe 3 times 10 ATR behind it. And eventually, this in a sense lets our profits run. It cuts our losses when it probably pulls back. This is, like I said, at least from my point of view, I hear this all the time. And, how about you, Andrew? Have you used this or do you use this kind of stop?
I have tried it in the past, and I guess it's quite a common bit of advice to cut your losses and let the profits run. So I'm interested to see what type of results you come up with out of this test.
Yeah, so these were definitely an interesting test. So take a look at the chart of the results. What are your first thoughts of looking at these? Tell me what you see and then what your thoughts are on it.
Wow, that's an ugly chart. So you've tested ATR trailing stop of multiples from 2 up to 10 in 0.5 steps. Now, the 2 ATR trailing stop actually loses money. It's actually a negative total RM of about minus 80, I think it's on the chart there, which is quite interesting. Now, as the stop gets larger, the R multiple increases. However, it doesn't really get up past around 250 there. So, I mean, that's less than half the R multiple of previous tests and not really much higher than no stop at all. So are you sure those results are correct?
That was my very first thoughts. When I got this, I was like, oops, I screwed up. And, I checked a lot of trades. I just went through and said, I have to have a mistake here. I actually do something, what I'll do sometimes when I don't know, it's like, is it right? Is it wrong? I'll step away from the code for like 3, 4, 5 days, and then I'll completely code it up again from scratch. I did that, got the same results. And it's like, okay. And then I called in a favor. I called up a research friend of mine and said, you know what? Here's the test. Can you please run these numbers? And, I just told him, here's the rules. Run them and tell me what you get. He got the exact same results. So at that point, I knew the results are correct, which I just found very surprising.
I guess that's a good reason, a good example of why we test these type of things, right? Because you hear something like cut your losses and let your profits run, but is that really the best way to trade a strategy like this?
Right, and exactly. Now, maybe a trailing ATR stop might work on a different strategy, but for this strategy, it clearly is not working, is not one of the best things to do. And just to give you a comparison, so again, I'm trying to get very similar holding periods. So to get a similar holding period to no stops, I had to do an 8 ATR trailing stop, which I've never seen anybody recommend an ATR stop that huge. No. But like you said, our win rate for that 8 ATR stop is 46%, which is not bad, but our multiple is only 0.22. And our total R multiple is 209. Not, like you mentioned, not much better than no stop at all. Again, I had these numbers checked. I thought they were wrong. This is, in a sense, like you mentioned already, this is why I test. Sometimes you get results that are completely counterintuitive. And again, I want to make it clear, I'm not saying a trailing stop doesn't work. I'm just saying it does not work in this particular case. So even though you may have thought, oh, I'm supposed to add I've got this strategy, I like it, let me add a trailing stop, I know it helps things. Well, in this particular case, it doesn't.
Yeah, that's interesting. So now I'm just sitting here thinking to myself, what are some other bits of trading advice I've heard over the years? And I immediately thought about risk reward, because you sometimes hear people saying, I don't take a trade unless there is a 3-to-1 reward or something like that. I think I've always been a little bit skeptical of that type of approach, because the market doesn't care how much reward you want, and who's to say the market will actually get to that level. Anyway, so I think that sounds like a good one to test. Have you done any testing like that?
Yes, I have, and it's really funny. You're already a green belt. Our next belt is the green belt. That's a perfect segue in. That's what the next test is. It's a very simple max loss profit target. So basically, I said, I'm going to set up a max loss ATR intraday again, and a profit target ATR again intraday. So a 10-period ATR. So it would be something like this. I might say I'm going to have a max loss of 3 ATR and a profit target of 6 ATR. So again, like you were saying, a 2-to-1 ratio there. So this is what I decided to go test next. Because again, like you, I've heard this one dozens of times. And, I wanted to know, okay, that's another one that we hear a lot about. How does that perform? Does that do any better? Does it do any worse? So again, looking at this chart, see, why don't you describe this for the listeners?
Okay, so you've tested a combination of stop and target. For a stop from 2 ATR up to 5 with a step of 1, and then you've combined that with a profit target of 2 times the stop up to 5 times the stop. So the chart is it's kind of a jagged type of zigzag lines for the total RM and R multiple averages. The peaks kind of come around about 5 times the stop. But once again, the maximum total RM you're going to get out of this is probably around 500. With a 4 ATR stop and is that 20 ATR
yeah,
target?
About 20 ATR. Wow. Yeah, so about 5 times your loss.
Yeah.
So this was interesting. Yeah, it's because I found that the ratio was not 2 or 3 in order to get the best values, but more 4 or 5 times. So 4 or 5 times your whatever you're risking, which I found it does work. Like I said, you got numbers around 500 or so. But what I found interesting though is, again, trying to make an apples to apples comparison. If you do a 5 ATR max loss and a 15 ATR profit target, which are both very big numbers, which I rarely see about, you have approximately the same hold of no stops. They have a win rate of about 42%. So, not too bad, about what you typically expect on longer term holds. But the R multiple here is only 0.378 and your total RM is only 391. So, trying to normalize for time, which is why I did this. These results still are not as good as our straight, just regular max loss and just holding it for a long period of time, which I found surprising. I was part of me expected this one to do much better. At least it did better than trailing ATR. It would have been kind of sad for me if that one didn't work. So those are just my observations on this one here.
Yeah, and I also found it interesting that the common 2 or 3 times profit to loss didn't give the best results, and that's one that you often hear a lot about. So
yes, it was very again. This is why I like to test these things, and this is why people should test the. You just don't know how doing something will change your strategy or not. So as a summary, we've gone through a lot of these. We've gone through 4 different stop types, and then our baseline so far. Our best results so far have been from using, either our ATR max loss or our percentage max loss. They gave both approximately the same numbers of a low 600 total RM. Our second best results came in from using the max loss and profit target, around 390 or so. And our trailing ATR came in last basically did about the same or a little better than our no stop case. This is kind of what we've kind of seen our progression so far. What have you seen? What's been interesting to you so far?
Yeah, I think the big surprise for me was that the trailing ATR stop actually performed quite poorly compared to the others. I would have expected that would have done a lot better. So that was quite a big surprise for me.
Yes, it was.
Okay, so where do we go from here?
Yes. So back to my martial arts analogy is sometimes you need to remake your game. You're struggling. You just don't know how to get better, and you need to try completely new things. And in some sense, it's taking a step backwards in order to go forward again. So in this particular case, what I like to say is we're still a green belt. We haven't progressed yet. And the reason is what we're going to do now is we've been testing intraday stops. So if that's back to our simple case of a 10% max loss. If intraday we were down 10% or more, we would exit. Well, as we know, sometimes we often get shaking out of trades. So what we're going to switch to now testing is doing end of day stops. And by this, I mean, we'll wait till at the close to decide whether we're going to exit. So the stock may trade lower than 10%, but if it rallies up and only closes, down, so that we're only down 5%, we're not going to exit the stock. But by the same time, the stock may go down 10%, continue to sell off intraday, and then may close down 15% from our entry price. So what happens when you do something like this is you get a lot more 1R multiple losses. And the question is, how does this, going from an intraday stop to end of day stop, how does this change results? And this is what I wanted to see. Does that make sense?
Yeah, that makes sense. I'm looking forward to seeing the results for this one.
All right, so we're going to start with a max loss ATR stop in this case, and we're just 10 paired ATR. We're going to try to test different factors, 2 times ATR. But again, we're just going to look at the end of day closing price, and at that point decide whether we have to get out at the next open. Again, I like this. It's simple. It takes the stock's volatility into account. We've all been in trades where they just sell off really hard and then rally back up afterwards. And this is what we're trying to avoid. It's just getting shaken out of these trades. That's the theory. The question is, does it work? What does the testing tell us? So what do you see in this chart, Andrew?
Wow, what a nice looking chart. So basically you've tested from 1 ATR multiple up to 8 in steps of 0.5. And we actually have the best R multiple at 1 ATR. And it gradually decreases as the ATR multiple increases. What I notice is that compared to the intraday stop, basing the exit on the close has significantly more RM total.
Yes, it was very interesting. Like you said, you get like a 30% increase in your total RM. So which was very interesting to see. I was really surprised with this. And the other thing, as your R multiple gets farther out, probably around 4 or 5, the results start getting very similar-ish. But at the low values between 1 and 3, it is definitely appears to have using an end of day is much better. Definitely kind of speaks to the you don't get shaken out kind of thing. So again, those are very good results that it was very good to see that. The sweet spot that I noticed was probably between 2 and 3 ATR. So that was, again, those numbers should sound familiar. At least to me, they did sound very familiar. And comparing this to no stops, and if we do a 2.5 ATR max loss, we have a win rate of 29%, very similar to when we were doing an intraday exit. We have an R multiple of 0.788, which is very good, and a total RM of 776. So, it's definitely a nice little increase over what we had previously.
Yep, that's a big jump.
Yes, it is.
So it's quite surprising there that there is so much difference between an intraday stop or using the closing price to judge whether the stop was breached. So what about the next level?
Yeah, so the next level, and this is where, it's like, okay, if it helps so much for the max loss, what about a trailing ATR? Maybe that's the fix. Trailing ATR failed. So, now as a blue belt, we're going to go for a trailing ATR. And instead of evaluating it intraday, we're going to evaluate it at the close. And maybe this is what fixes the trailing ATR. So what do you see in these results? Do you see an improvement or not?
Not.
Yeah, that was kind of a little depressing for me too.
Yeah, so what you've done is you've tested ATR values from 1.5 up to 10 in steps of 0.5, and 1.5 is actually a negative total RM.
Yes.
Yeah, surprisingly, but it increases sharply up to around 4 ATR and then rises gradually from there. But The total RM values at 4 ATR is only 200, which is like barely more than no stop at all.
Yes. So yeah, it was very interesting to see this again. A little pretty funny. These are the bad results as I was calling them. Um, so again, unfortunately, again, this is why I test. I was hoping this would be the improvement. It showed some positive results before on the just straight max loss, but not here.
Mm.
So sometimes it helps, sometimes it doesn't, and apparently in this case it doesn't.
Okay, so that's interesting. Now, what about the next level? What's for purple belt?
All right, yes, for purple belt. Now, the last thing we'll probably be looking at is doing max loss and a profit target ATR. And again, now, instead of doing them intraday, we're going to do them in the day. Maybe in the day will give us an extra little boost that we're looking for versus, looking at both the profit target and the max loss at an intraday basis. So does looking at in the day improve the results. So now here we have our chart here. What do you see here?
So it's the same type of jagged line we saw with the intraday stops, although the total RM and average R look to be quite a bit higher. Is that right?
Yeah, so if I try to normalize for approximate same holding time, what I look at is a 4-period or a 4-factor max loss and a 16-factor profit target. We'll get a win rate about 40%. We get a total RM of about 626, which is much higher. Beforehand, we had a value of 391. So this actually gave us a big increase in our total numbers.
Okay.
All right. So now we've gone through 7 different stops that we've tested, along with our baseline of no stop. What do you see in our final results? In a sense of, what surprises do you see? What good things did you see? What bad things have you seen?
Okay, so I guess we'll start with the worst results, other than no stop at all, was the volatility trailing stop intraday performed the worst, closely followed by the volatility trailing stop end of day. So they were that was quite surprising results. The best results came out of the ATR max loss end of day.
Yes.
So just having a max loss there and letting the thing run actually produced the highest total RM out of the lot, which I thought was interesting. And you could probably say that a good balance perhaps would be the ATR with the max loss and the profit target.
Yeah, I agree that the ATR with the max loss and profit target in a day, even though the numbers weren't as good, I think as a trader, it's kind of hard just to buy something and hold it 18 months. But it's easier to say, okay, I've got a profit target and I've got a max loss, and that's where I'm going.
Yeah, okay. So I guess some general observations, I can see a couple there. So instead of using intraday exits, performance was improved by using the closing price to evaluate exit conditions. Another one was that small targets didn't perform so well, like the 2 or 3R that we hear about, didn't do so well.
Yes.
The volatility and max loss performance was best between 2 and 4, which is something that we do hear about quite often.
Yes.
And one more, the percent stop performed very similar to the volatility stop as well.
Yes.
Which is quite interesting. So do you have any other observations?
Yeah, I mean, you think you've covered a lot of things, but I think overall the biggest things is, know what your stats are. We focused on R and R multiples, maybe focusing on different stats, maybe average percent gain instead of R multiples. You just care about, how big is my winner on a percentage basis. That may produce different results. So it's always important to know kind of like, what are you measuring? Know that ahead of time. Because different stats may give you different results depending on what you're trying to do. The other thing is, the results are not always what you expect. I was surprised multiple times, both on the positive side and the negative side on these tests. This is why I do this. This is why I love doing this kind of work. I'm always being surprised. I'm always learning something new. Again, I want to reiterate this. Just because a trailing ATR stop did not work on this test does not mean it doesn't work on all other tests. It just means on the context of this particular strategy, it doesn't work or doesn't help things at all. Different strategy, it may perform the best. So, don't take this as back again to what I was saying, as a black and white thing, as saying, trailing ATR stops don't work. No. I'm just going to say they don't work under this context, under the way we were testing it. There may be a different strategy where they work insanely great and not the best strategy.
Okay. If you could sum this all up into 2 words, what would it be?
It'd be test everything.
Yeah, I think you've done a good job at showing the importance of testing everything today. So we got up to purple belt, so a couple of belts to go. But where are you in all of this, your knowledge of stops?
Yeah, I mean, doing this definitely increased my knowledge of stops. As much as I would love to say I'm a black belt in my knowledge of stops, I think, I still got a lot to learn. I'm probably maybe a brown belt is where I'm sitting at. Just still got works to do. Not quite a black belt. Don't know everything I need to know about stops. I don't know if I ever will. But I think I got a good solid knowledge, and hopefully I've given you some more knowledge and the listeners more knowledge about stops and and what to expect or not to expect when they use them.
Yeah, it's been a really great study that you've shared with us today. I'm sure a lot of people are going to find it valuable, and I myself also found a lot of value in it. So thank you very much for sharing with us today. Appreciate all your efforts with that, and I wish you all the best.
Well, thank you very much, Andrew, and thank you so much for taking the time to listen to my research.
All right, thanks a lot. Cheers.
Thank you.
Bye. Thanks, Cesar, for sharing your research. I found it really interesting to see the results of some of those tests and the wide variation of results too. Now, as I mentioned at the start of the episode, we have some downloads available on the show notes page, including a PDF and spreadsheet of the test results, plus a video version of this episode. So to get those, head over to bettersystemtrader.com/37. Additionally, if you have any questions or comments, please post them in the comments section of the show notes page too. That's bettersystemtrader.com/37. Anyway, that's it for this episode. I hope you enjoyed the research that Cesar shared with us today. I also hope that everyone has had a happy holiday season, and I wish you all the best for 2016. Thanks for listening to Better System Trader.
Thanks for listening to the Better System Trader podcast. The next step is to head over to bettersystemtrader.com for more expert tips, practical advice, and exclusive content. Catch us next time for even more great ways to improve your trading here on Better System Trader.